we go. Hopefully that'll have come through, everybody. Yeah, big thumbs up. Saw come through. Terrific. So good afternoon, everybody. We've got a packed program today and some fabulous speakers, and a big thank you to both yourselves for turning up to come and hear to these wonderful words we're going to share with you, and of course to all our speakers. We would ask that if you're joining, if you could turn your cameras off if you're not one of the presenters, and also mute your microphone. That'd be absolutely fantastic. So this is like some kind of game when everybody's just piling in with it. It keeps blipping every time somebody turns up. Anyway, so I'll keep repeating that message as we go along. So yeah, my name is Sam Stevens. I'm the host for today. This is the third year we've run the Innovation Challenge, and we're absolutely delighted that our headline sponsor is Shakespeare's Martineau, and we've got Roger talking to us later on about the legal implications of funding, and also to Jenna from Modus Accountants, who are the workshop sponsors. Really am delighted to launch this, our third year of running the Innovation Challenge, and we're hoping it's going to be bigger and better. And certainly by the number of people we've got registered today, it's looked like we're achieving that end to really make sure that the speakers and the sponsors get value for what they've put their effort into. So a bit of housekeeping to get us going. Please keep your microphone muted for the duration of the workshop. We are going to be running the chat function in Teams, and if you've got any questions at all as we go through the workshops, please just pop them in there. I will then, if it's an appropriate question, of course, I will then bring that into the conversation with the presenters at the most appropriate time. So yeah, please do use the chat. The more chat we get going in there, the more bringing alive we can the presentations. We've got 2 10-minute breaks built into this, kind of just before 2 o'clock and just before 3. So please do take advantage of those. If we're running short of time, we might shrink those a little to make sure we do finish at 4:30 and give all the presenters a real opportunity to share with us their expertise. So yeah, looking forward to it. So the Innovation Challenge, the slides you can see there, they are the people who have so kindly given up their time and effort to come and take part in the workshops to really try and help everybody out there learn a little bit more about how to run a successful business and launch an entrepreneurial business and get innovation out into the marketplace. Absolutely delighted that these companies have given up their time free of charge to really put this together for the business community. So headline sponsors, Shakespeare, they kindly sponsored last year, and delighted that they signed up again this year. So a big thank you to them. So the Innovation Challenge, I'll just recap on that. We launched it in February, and we've got 4 workshops, same as last year. So we're talking about finance, people and recruitment, product development, protection, and really the voice of your customer. And the final one in June is all about commercialization. And actually, that could be you commercializing your business through selling it and exiting, or it could be about getting your product or service into the marketplace and making a bundle of cash for yourself. And then we've got the final showcase event, which is at the National Space Centre, which is in October. So after the June workshop, we open up the innovation competition, and that's where you can apply online to take part in the challenge. And we're asking for younger start companies with a great idea or a product or a service, and they're looking to get themselves promoted and try and get some funding into their business. There's a very simple process online that you can fill in, attach your business plan or your slide deck. Last year we had over 60 applicants, and the top 10 we invited to the showcase event in October. And as I say, that's at the National Space Centre in Leicester this year. We will have over 100 to 120 business professionals and investors there. So it's a real opportunity to get your pitch out into the public and try and drum up some funds for your business. It's usually a fabulous event and really well received by everybody. Okay. On the back of that, the top 3 companies take part of a prize fund. So there's a £5,000 cash prize. And then a lot of the people who've been doing talks on the workshop have donated time to help the winners move their companies forward. So these are just some of the companies that have so kindly provided that to us. So Shakespeare with some legal work, for example, Modus, first year accounts for a company, Conformance at the bottom there. They're doing some CE marking consultancy for companies. Rocking Horse, they'll be talking later today. They've got a great offering, and they've said that they will waive their fee for that, etc., etc. A really great opportunity. Okay, if you're arriving late, folks, thank you very much for joining us. If you can turn your cameras off and mute your microphones, that'll be fantastic. As I say, here's the dates of the next 3 workshops. Do please go and visit the website tbat.co.uk. You will see a link direct to the Innovation Challenge. It's there anyway, and do get yourselves booked onto the next 3 workshops. They're usually fantastic, and I say the quality of the speakers is just superb. And then if you want to take part in the Innovation Challenge itself, if you've got that early start company, kind of up to 3 years, great idea. Please do get your applications in. You can register now, and as soon as it opens, we'll be in touch with you to get your application in. Okay. Why should we run a finance workshop? I've been in business now for over 22 years, and what was really obvious to me, I was an engineer, worked in some big PLCs. I really had no idea about finance in a company. And so over the last 22 years, through various workshops, help from accountants and business professionals, I've actually got a fairly decent knowledge of finance in companies and what to look for in accounts and cash flows and that sort of thing. But it's really important that every company has knowledge of a finance in their company, and a workshop is just a great way to get some of that information across to you. And Donald Rumsfeld, love him or hate him, he did come up with this classic quote about 22 years ago. Basically, there are things we know, so that's great. We can use that. There are known unknowns. There are things we don't know, so we can go out and find out about those and then use them. But I think in business, because it's certainly around finance and some of the other workshops, there's lots of things you don't know. And these workshops are all about bringing some of those aspects alive. So you now think, oh, I need to go out and find out about that. I didn't know about it before. So, there's going to be some great information provided over the next 2 or 3 hours. I really hope it's of interest to you. These are our speakers for today. And what a handsome and gorgeous bunch they are too. There's some real talent here, and every single person has got some gems that they want to share with you. And I thank them very much for coming along today and giving up their time for us. Okay, if you've just joined the workshop, if you can please mute your microphones and turn your cameras off, that would be fantastic. Okay, I'm going to move on to workshop 1, of which we've got Jenna from Modus Accountants. So all the other lovely speakers, if you could turn your cameras off. Jenna, please do not turn your camera off. It sounds like contender ready, doesn't it? It's like gladiators, this is. You will go on my first whistle. So I think Jenna, Jo's going to run your slides, isn't she?
I was going to.
Oh, no, you're going to run them yourself.
Yeah, if I can get it done correctly.
Okay,
just had a trial run and I'll still get it wrong, I'm sure.
No, you won't. No, you won't. Here we go. I'll stop sharing.
Right, bear with me 2 seconds.
So Jenna set up Modus Accountants a few years ago, and we worked really closely with them. They're an absolutely terrific company, and from my experience, always put their clients at the heart of everything that they do. And we're absolutely delighted that Jenna's here to talk today. So are you about ready, Jenna?
I am. There it is.
There we go.
Okay, I'm just going to move it. And can everybody see? Is that okay? Can you see that, Sam?
Yeah, perfect.
Okay, perfect. It's all right. I've got 3 screens, so usually I'm like a meerkat going across the screens. Good afternoon, everybody. My name's Jenna. I'm one of the associate directors here at Modus Accountants. We're a small to medium-sized business just based outside of Oxfordshire, and we were actually set up. Our business owner is actually an entrepreneur and a business owner himself. He just got really fed up of not getting the right support from accountants. He felt that it was a bit of a year-end exercise of here's your accounts and here's your tax bill. Oh, and here's our invoice as well. So we really tried to create something that's a little bit more involved with our clients. I hate to use the word family, but it really is a bit of a network, a bit of a community that we've got here. For example, one of the things that we like to do with our clients is we invite everybody to a 90-day strategy event. So people can come along of all different businesses, share knowledge with each other. There's no stand-up presentation or anything like that. We have client lunches as well, where it's just getting like-minded people, so investors and business owners together, to share knowledge, and that's the kind of environment that we create.
And I think, Jenna, that's really important, because I think a lot of business people can be quite lonely. And I think getting them to talk about some of the things that they're facing in their business and sharing a bit of best practice and opening the eyes to other help that's out there is really, really important. I didn't know you did that, by the way. Really good.
Yeah, it's great. And what we do is in our sorry, I'm going off a little bit course here, but in our 90-day strategy, we will literally bring businesses together. It's free of charge, and we'll go through a bit of a life cycle for the client. You know, what's your pipeline looking like? How do you deal with your marketing? There might be a client who does marketing that comes along to that event. So it's a really nice, completely laid back. There's food as well, food and drink. Lovely environment to be involved with. Today, don't worry, there's no hardcore Excel spreadsheets coming or anything like that. Today's just literally a quick whistle-stop tour of some of the considerations that you need when you start setting up a business. So,
okay, if we, people just joining us, if they can mute the microphones and turn the cameras off, that would be fantastic.
Okay, so literally the basics is you're going to be, you know, you're very energetic business startup. You're going to be really heavily involved in your product and your idea. And kind of the finance can take a bit of a back step. It's kind of like, oh, we'll deal with that later. I think it's really important to get into the mindset that you are a business owner now as well. So the finances really do, even if you don't like it, you need to have at least a very good understanding, or at least not be afraid of it. So one of the first things we would say is just get everything set up correctly. And one of the main backbones of absolutely everything is going to be the software and how you look after your data. So your raw data, what you're doing day to day, especially if there's a few hands involved with stuff here, there and everywhere, you know, somebody's doing one thing, you know, another business partner's doing another thing. It's really nice that you collaborate together, get the right software set up. A lot of our clients use Xero. That's your main sort of bookkeeping component that records your day-to-day transactions. And then there's lots of apps in the marketplace. You know, if you've got a specific CRM system or project management system, a lot of them will feed into some of these main bookkeeping providers now.
Thanks ever so much.
Yeah. So your time, the more you can do to save your time on the finances, the better. There's even things like HubDoc and Dext, which will capture your receipts. So that data will, you know, the AI technology nowadays will enable you to literally get that data captured and put that into your bookkeeping system as well.
And do most clients give you access to their account system so you can help set it up initially so they capture the right information in the right places and that sort of thing?
Yeah, absolutely. And that kind of brings me on to the next point is we can help get that software set up. I'm sure any accountant will, speaking on our half here, but yeah, we can get this software set up for you, do a little bit of a training or an overview. You know, we won't just leave you to it. And again, depends on how comfortable you feel with it and how much hand holding you would need. And we also do like little videos for clients. If it's something specific to them, we'll record like a little mini video that they can keep in their library to refer back to, rather than you trawling the internet trying to find, you know, what to do in this particular bit of software. And yeah, just that point, you know, be really clear and accurate with your bookkeeping. So I think learn to really try and understand what you're doing and what those implications are. So, for example, you know, what is revenue versus capital expenditure? So things like your plant and machinery, or some of your intangible assets, you know, you might not think of those as an asset to the business, but they will be building towards that. So you'll see a cost going out your bank, you know, for legal fees, etc. But actually fundamentally where they go in regards to accounting, it's quite good to understand that and what the impact is. And kind of a point that leads on to that a little bit later on is how that ties in with your business plan and, you know, how you manipulate all of your data. Also managing and tracking your costs. So again, something like getting the right software like Xero. I don't work for Xero, by the way, just they're the best. If you said QuickBooks or Sage, Xero is the best. For when you're doing things with, you know, TBAT, if you were going for an Innovate UK grant, or if you were going for some of your R&D tax credits, if you've got that correct raw data, you can do things like track those costs. So Xero, for example, you can add like almost like a little tag on there. So you can filter a report and it will tell you, right, you've tracked all of these costs in regards to whatever sector they are, subcontractors, whatever. you can track those costs as R&D, so that when you're working with TBAT, that data that they're going to take from you to help create that report is going to be so much more useful. We often get asked to do independent examiners reports as well to support some of the grants that go through. So again, we can help do that. And again, one of the best things is if you've got the right data, it makes that audit so much easier, and you know, understanding your business as well.
And Jenna, you know, when if a new start company comes to you, Jenna, do you work with them so you understand, get to know a little bit about their business? Do you then structure those accounts for the best fit for their company, or is there a standard fit that fits everybody?
Yeah, we pretty much, you can do either or really, and that comes from understanding the client, I suppose, and what they want to achieve and what they want to get out of it. So we had a client join us the other day, new startup manufacturing business, and we went through Xero, and we put some time aside to go through and say, right, what's most important to you? What do you want to get out of this software? Because you can pull, again, it all goes back to having that really raw data being correct. You can't pull any report off to do anything if the fundamentals, the foundations aren't correct. So we'll go through, and we say, we're here. What I'd rather you do is ask me the question rather than do something and worry about bothering me. Just ask the question. I want you to understand it. And that's how we approach sort of our relationships with the clients. And when we get to the year end, is we like to provide a report, spend the time with the client going through their accounts so that they understand it. So it's not this, demystified thing when you get to the year end of, oh my gosh, what do all these words mean? Because I can assure you a lot of it is bedtime reading in accountancy standards. So as long as you're happy, then we're happy, because that's, we care, basically. We want you to do well. It makes us feel better. It's the highlight of our job, really. So yeah, we can tailor that to do whatever, and then we might suggest that you go and find a different app that might support you better, or you might come to us and say, got this cracking bit of software, how do we link that with something like Xero? How do we get our day-to-day management and running of the business to link with the financials? That's another really important point. Just moving on to cash flow and working capital. Yes, obviously in the early days, these companies are going to be, very cash hungry. That's the fuel you're going to need to get everything going. And, wherever that funding comes from, and I'm sure Lewis will go through, sort of debt and equity financing a little bit later on, but wherever that money comes from, ultimately, that cash is gold. Cash is king, that old saying. You really need to have a grip and a management over that. Again, if the raw data is correct, you can run any report to try and manage that cash flow. If anybody loves a spreadsheet, I still love a spreadsheet. I'm not completely dissing the spreadsheet. So, if you really like that side of the business as well, it might be that you can focus on like a costing element. But also, if you feel comfortable, you'll have the right data to pull out to create a cash flow report or manage your working capital. Again, or you can have the support of an accountant or the software that will help you do that, pull that information as well. So it's really important that the old saying, as true as it is, as cliche as it is, cash is king. So you really need to have a good grip of that and exactly where your funds are going once you've worked so hard to get them into the business.
Yeah. I did have one story, a chap called Donald, and he says, yep, Sam, I keep accounts, of course I do, but I just keep an eye on the bank account. That's all I need to do. I said, that's very interesting, Donald. Are you sure you're right? I said, yeah, I'm right, Sam. I said, very good. 3 months later, 9 months after his year end, he had his accounts done, had to pay his tax bill, and he got stung with a £70,000 tax bill he had not saved up for.
Yeah.
So understanding your profitability very early on, and in your cash flow and your working capital, understanding when chunks of money have got to go out that are odd, like your corporation tax or your quarterly VAT, make sure you plan for that as well, because that can be a real issue.
Yeah, absolutely. And sometimes I'll have a check-in with a client each quarter, and we'll say, even if you don't want to look anywhere else in Xero, just let me highlight this figure and just keep an eye on this particular line in this particular report. And as long as you're at that point, you should be okay. Yeah. And that's a great point, Sam, because there have been businesses where they get into what's called over trading. So all of a sudden, they put so much work into building the business and developing a product, and they get a demand for the product, but they can't actually provide or service that customer. because they haven't kept an eye on their cash. So they've got a fantastic product, but actually the cash is not there to them to be able to produce the actual, units or quantities that are needed to actually service that customer.
Yeah.
And, in the early days, when you do get something really exciting, it suddenly does go to market, which is eventually, where everybody absolutely wants to be. The temptation is to say yes to everything. And actually, sometimes it's a lot more powerful to say no. And even, you don't want to lose your place in the market. You don't want to turn down business, but actually it's just a case of renegotiating or just managing people's expectations. But actually, I've looked at my cash flow, I've looked at the working capital, we cannot fulfill that order. What happened with one business that we kind of took over towards the end is that they kept trying to fulfill orders that they just never had the cash. And every time the funding came in, they were getting investors in, the equity in the business, the dilution of control. It was a family-run business that has actually been taken over by somebody in China now, and they've lost their baby almost, So yeah, don't underestimate the fundamentals of basics, getting that data and managing your cash flow.
Yeah. And I think on that is a little bit of understanding the actual market that you're in. So we had one recently. We're helping this person. They've got this great idea for a product. They were going to sell it through influencers and sort of a direct from business to consumer. And then Esther, one of my team who's going to be talking later, said, you need to understand there's a 30% returns in that market. So you don't just sell it and forget about it. 30% will come back to you because people are idiots and won't understand how to use it, despite how clearly you do the instructions. And in your cash flow, you need to build that 30% return in. Otherwise, it's really going to upset your apple cart. And now he's done that and built it into the cash flow. That's all good. But he understands now.
Yeah, absolutely. Can you still hear me, Sam?
I can indeed, yes.
That's all right. It's just because my earpods just died on me, typically. So I just wanted to double check. Next one, paperwork. Everything that accountants will look at, everything that you are kind of guided by, whether you feel it or not, is actually a lot of contracts, a lot of paperwork. So paperwork is always done by the tax point date. Everything, an accountant will always ask you to go back to a statement or a contract to verify any treatment, basically, or anything, that you've agreed to. So yeah, I know it's few and far between getting that paperwork, but just keep hold of it, even if it's in a shoebox. Keep hold of absolutely everything. And finally, VAT registration, quite an important one, actually, probably doesn't get spoken about enough, is being aware if your business is close to hitting the VAT threshold, which is currently 85, that is going up to 90,000. Not only that, some people quite like to voluntarily register for VAT sooner than they need to, because while you're buying in, maybe a lot of assets, a lot of equipment to start off with, you've got a lot of cost. Registering for VAT will mean that you can actually get that VAT back. The only caveat to that is when you do register, you have to have some kind of anticipation of when you're going to get some taxable income into the business. So I'm not saying everybody go out and voluntarily register for VAT, but it's just another consideration. And then when you do register for VAT, VAT is one of those horrible middleman taxes that you're never going to make money off, but you need to get it right so that you don't lose money. So it's if you've got things like imports and exports, that's quite a complex area. So you need to know, does that apply to me? When I'm, getting stuff imported at the borders, how am I affected by that? What rate of VAT do I charge, depending on what industry sector you're in? Am I an exempt supply or am I just zero rated? So it's quite a complex area, and it's something you really do need to speak to your accountant about, unless you want to spend hours trawling the HMRC rabbit hole. The next part, these are actually real people that work at our firm, by the way, because I didn't want to copyright anybody else. So these are all genuine people. So you've got your business idea, you've got you've got some of the fundamentals right. What are you doing next? Well, you're probably going to be going out and touting for investment, not true Dragon's Den style, but a little bit like that. And as things change, because in your early life cycle of your business, there's going to be a lot of change going on. You need to be prepared and ready for that. So again, once you've got the right data, it's really understanding, do I know the difference between profit and loss and a balance sheet? I don't need to know all the rules, but do I know roughly what does that mean, a profit and loss? Okay, that gives me my profit. And do I know what a balance sheet is? Right, you know, how am I gearing my assets and my liabilities in the business? And especially when you start getting equity in as well, that's going to change your balance sheet position. So you don't have to, you know, go on a course or anything, but I think it's really important just to have that basic understanding, because moving on to the next point, what you need to do is correlate that with your business plan. So you might have a business plan, it might be great, but actually, do we have some supporting numbers to back that up? Do we have any science to that? And actually, you know, if my business plan changes, if I remove that one jigsaw piece, what's the impact of that? What's the knock-on effect? So again, the raw data into a usable report will help you with your business plan, so you can manipulate and change things as and when things, you know, obviously change.
I often say the best investment when you set up a company is to go on a 2-day accountancy course, to at least just to understand the basics, profit and loss, balance sheet, cash flow, rudimentaries about tax, just so when you see a set of accounts, you can understand them to some level. And when you talk to somebody and they're talking about turnover, you know what it is. You know what net profit is, what gross profit is, what debtor days are. Really simple stuff. But if you don't know about it, you could get caught out and not look quite so professional.
Yeah, and it's just maybe terminology or the language that's used just might make you feel a bit more comfortable, and you know exactly, as you say, when things change, you know exactly what bits of data and what reports to manipulate. If you want to go on an accountancy course, that's absolutely fine.
I'm not saying become an accountant. I said 2 days, 1 day, 2 days.
Okay, if you've got a fun weekend lined up.
2 or 3 minutes, Jenna.
Yeah, okay, cool. Keep, you know, data records up to date. Yeah, again, we've kind of covered that point. One of the big points that I could talk about all afternoon, but there's, you know, other people that will probably go through this, is your company setup and structure. So I think it's really important when you set up, you go straight in with your limited company, you get really excited about your business idea, and you've got your best mate who you've known from primary school for years as your 50-50 shareholder. I think it's really important to understand exactly who your shareholders are and what does that mean. Okay, what rights do they have to that business? Secondly, who the directors are, so who's making the, you know, who's doing the decision making for the business, and just making sure, again, you know, people like Shakespeare will be able to help with this, that you've got really solid shareholder agreements in place. Because I've seen families fall out over businesses, I've seen best friends fall out. You know, and it may be that you've got, you know, someone's wife as a shareholder, which might make sense from a tax plan perspective, but actually, depending on your vision for your business and your aim, your goal, which again is something I would always talk about with a client, you know, is that specifically the right person to have as a shareholder? Is this going to cause you problems when, you know, later on the company's actually got, you know, a lot more value to it and you need to sort of buy them out almost? So it's really important that you've got the right shareholders, because, you know, it might cause you problems further down the line. And also, sorry, I appreciate we're rushed for time, so I'll speed the last bit up. But, you know, when we get things like seeders investments that are really exciting, and we get people investing in our company and they want a bit of a share, it's quite easily sometimes to see that dilution of control maneuver. So sometimes I've had people sign up to seeders and not realize that they're giving away a chunk of their company almost, for whatever reason, however it was explained. They just thought, oh, you know, I was just getting some cash in. I didn't really understand what that meant. And before they knew it, they've really lost that, you know, a lot more control of their brainchild, what they started with. So yeah, getting that setup is really, really essential. And, you know, as I said, people like Shakespeare will go through those shareholder agreements, making sure that, you know, that kind of supersedes anything that's set up at Companies House almost.
And that's a great segue into the next workshop we're doing in April, which covers people, and that covers a little bit on shareholders, who to invite in as a shareholder originally, but also how to then incentivize new staff and maybe give them a shareholding later on. And so that really tricky piece about who, when and where, why, we're covering through a bit more detail in the next workshop. But you're right, if you don't get it right to begin with, you can be really badly bitten.
Yeah, and it's almost forgotten about. You know, you get your birth certificate of the company and you get the standard memorandum of articles, and you kind of think, oh, I don't really know what that means, and we'll wait till the first year end. But actually, It's quite important to keep track of that and make sure company's house is up to date. Some people even have more shares issued to start off with. So rather than just having 2 shares for a 50-50 setup, they might have 1,000 shares, because they can, you know, they can see then that when the time comes that they're getting investment for their equity share, they see how much they're giving away and everything like that. They don't have to issue more shares in the company. So it's just another way of how to manage it. And finally is just getting, I've put accountant relationship, but this is actually any relationship. I think it is really important, without sounding cheesy, that you've got a good relationship with your accountant. Even if you have to kiss a few frogs to start off with, you know, get on the phone, call around people, see who you kind of fit with, because that's such the biggest thing. You know, fees are roughly going to be the same wherever you go. I'm sure you could get, you know, off the shelf accountant file online for a couple of £100. You know, you're not going to need a massive company to start off with. So just get that relationship right. You need somebody that you know is going to hold your hand when you need to. It's not going to charge every time you phone up. But at the same time, I think there's got to be a little bit of expectation that you will have to pay if you do need support. And the way that we work is that we will do that to start off with, you know, and it's flexible and it's fair. And then we say, actually, do you know what? We've off you go swimming kind of thing. You're good to go now. So yeah, that relationship is really important. And it's nice when you get it right. And especially from, you know, our perspective, sometimes we will say to clients, you know, actually, we don't know if we are the right fit. We think you need somebody that's kind of lording over you rather than a partnership. You know, you need to be told A, B, C, rather than this collaborative relationship that we try and create. Some people just like to be told what to do in the nicest possible way. So I think it's really important that you find somebody that fits your style and understands your business and where you want to go to achieve that.
And I think this one of the final points would be, and don't be afraid to change. You know, if you're with one accountant and it's not working out, or you feel that they're not doing the best they can, change. Because I think a lot of people see it as what I'd call a distressed purchase. Oh, well, I'm with the accountants, that's it, I'm with them for good now. And they shouldn't feel tied in. It's, you know, it's their company's health that they're looking at, and their own health. So
yeah. Absolutely. And you know, we all have to adhere to the same standards, but there are some people that are quite happy to do everything, you know, a bit reactive, a bit on paperwork still, you know, where there's some firms that, you know, like to do everything digitally. For example, we like to file accounts within 2 months after the year end, because there's no point in us filing your accounts right by the filing deadline, because we've nearly gone another year without, you know, really planning for that year. So yeah, find somebody that fits with you. And I've just put on here just some of 5 takeaways. I'm not going to go through all of that, but yeah, just a few takeaways of today, really, because as I said, we could go on forever. Brilliant. But it's just a quick whistle stop tour.
Always an absolute pleasure, Jenna.
Okay.
And I'd written 4 questions.
Okay.
And you've answered all 4 of them during the chat. So
okay, that's good.
and I think that point about get your accounts done ASAP after your year end, and don't leave it 9 months then and have your big tax bill that you weren't expecting, that sort of thing. Absolutely, get it done ASAP.
And if you do have any other questions, sorry Sam, Joe's got my details, everyone's got my details, and these are our details on here, then I'm around. Feel free to get in touch.
Bless you, Jenna, thank you so much. Thank you for sponsoring this first workshop. Amazing.
My pleasure.
And always a pleasure talking to you, Jenna, and your knowledge is fantastic, and the way you share that openly is brilliant. So thank you very much.
Thank you.
Okay, right, Esther.
Hi, Sam.
Okay, Joe, are you running Esther's slides? Or are you running them?
Can you see them?
Yeah. Okay. So Esther is an absolute star in our company on the commercial side, and she's going to talk to us about grant funding. You've got 10 minutes. Off you go, Esther, and I'll butt in as usual.
Oh, thanks, Sam. And what I would say is I normally get about 45 minutes to do these slides. So if you feel like I've skated over something and you want to find out a little bit more detail, you know, we can always have a chat later and you can book in with me. So, you know, we're really lucky in the UK that we have, you know, lots of different grant funding out there. There's different grants. So we've got kind of regional grants that might come through councils, local enterprise partnerships, you know, maybe even through some kind of I think that the growth hubs and things. And then at the other end of the scale, we've got the large capital expenditure grants, and they tend to go to big industry and they go direct from government. But what we're really going to focus on today is we're going to look at the research and development grants that come through, local, they come through the government, but they filter through Innovate UK, and they're really there to stimulate innovation. They take away the risk and they make sure that the UK stays at the very forefront of, developing new products, processes and services, and ultimately they keep that innovation wheel rolling. I can have the next slide, please, Joe. And this might seem like a really strange question to put up when we're talking about grant funding, but we get asked this all the time. Why should we apply for grant funding? Because yes, ultimately it's free cash, but you do tend to hear a few people they've got horror stories where they'll say, well, I know somebody and they applied 5 times and they weren't successful, or I've heard the success rates are not great. These things do happen. There are grants that got quite a low success rate, but when you start to look at why they weren't successful, people that are applying for grant funding need to put lots of time, effort, they need to understand their business, and they really need to make sure that, they're fitting the scope of the competition. So those people that are applying, in a weekend before the grant, and then they say, well, I'm not successful, but, there was a reason behind that. So we start to whittle away the ones that weren't, really shouldn't have applied. You get about 25% of those companies that have got a sensible idea, they've looked at their business plan, they've got their finances in order, they've got a really good team, those people are successful. So it's about making sure that you're applying at the right time. And then ultimately, it's a great way to get money into the business. And it's also, at the same time, you can start looking for investment, because if you've been through the rigmarole with Innovate UK, they've done all the due diligence on you, they've rubber stamped you to say, this is a really good project, they've got a great team here, and ultimately, not only is it a good team, they've got their finances in order, and they know how they're going to take this to market. So when you go and speak to your investors, pretty much your Innovate UK application is almost what you're going to be taking to them in your pitch deck, because everything's there, it's been rubber stamped. And for them, they're looking at it thinking, oh, it's a great time, the risks.
I would put one caveat on that, Esther. We did some work, and it was a warts and all report for somebody about their business idea. And I said to them, you're 2 dusty grey-haired blokes joined together by cobwebs. This is a warts and all view of your business proposition. Do not share this with anybody. Take out the bits of information you need and then share those little bits. And they came back a week later and said, oh, we shared it with the bank manager and told us to clear off because it wasn't. And I said, he read because you were 2 crusty grey-haired men joined together by cobwebs. No one's going to invest in you. What you need to, I said, what you needed to do, cut it out and say how you're going to recruit a young MD to do it. Yeah. So be careful what you do share, folks. The Innovate UK application is brilliant, loads and loads, fantastic. Just be careful what you actually then give to an investor.
It's more the fact that it's been rubber stamped, so they know you've got that really good route to market. So good time to talk to the investors about it. But also, quite often early stage businesses, companies, they can't do everything on their own. So they need to start going out and having a chat with different people to see, okay, do we need collaborators? Maybe you need to be working with another SME, or you need subcontractors, or even going to, academic institutions, NHS trusts. And if you don't know how to make those connections, you can go along and speak to what was Innovate KTN a week ago. I think they've now just changed their name to Connect, and they can help and they can make some introductions, or come and have a chat with us. Over the years, Sam's been doing this for many, many years. There's likely that there's somebody we've spoken to who might be able to help in that link in the chain that's missing for you. And the other big thing is, ultimately, you're going to reduce the amount of cash that you're putting in yourself. So, R&D is really, really risky, and sometimes things don't go to plan. And the good thing about grant funding is it's not a loan. You don't have to pay it back. I'll have the next slide, please, Joe. So, as I said, we are lucky in the UK in the fact that we've got a really broad range of funding bodies. Most of these now will roll up and they'll come through Innovate UK. But as you can see, there's some really specific grants out there. So whether you're a farmer and you're looking to use space technology to look at your fields and see where you're going to put your fertilizers, or you've got really good ideas about how you're going to reduce our carbon on net zero, there's always going to be a grant that's themed around what you're doing. And what I would say about the grant funding landscape is it's constantly changing. And if I can have the next slide, please, Joe. And this is what it looks like at the moment. And we're kind of coming to the end of March, so there's not a huge amount of grants. I think they're waiting for April to come when they start to get some more funding and they start launching new grants. But this is really just to give you an idea of the different types of funds that are available. So there's open calls for innovation, and these are great. If there isn't something that pops up right now, and you're looking at biomedical catalyst is coming out later in April, but if there wasn't something specific to the area that you're in, then you can apply into something like an Innovate UK Smart Grant, and they'll fund anything from 100k up to £1 million across multiple sectors. The difference with the Smart Grant is you've really got to be, have like the state of the art, something that's really cutting edge that they haven't seen before. And it's not just different in the sector that you're working in, it's across multiple sectors. So you need to be able to commercialize within a couple of years of finishing your project. And if you fit that scope, the Smart Grant's a really good one. But what we say, at TBAT is if we can find something that's themed to what you're doing, then you've obviously got less competition. So with a Smart Grant, you can literally have people that are applying for carbon capture, green hydrogen, right the way through to cancer therapeutics. So you kind of sit there thinking, oh, it is big competition. But if you then look at and think, oh, well, actually, I'm in environmental monitoring, the amount of competition you're going to have is actually reduced. And also the people that are reviewing your applications are going to be, experts in what you're doing. So they really understand, the benefits of what you're doing. And if you're solving real world issues, in those themed events, they really understand it. So.
Yeah. And I think, Esther, it's worth coming to talk to somebody like ourselves because, okay, these are the only grants that are open now. What you can see, folks, is that a lot of these are only open. So when they might be talked about a bit earlier on, but they're actually only open kind of for a 6-week period. So if you come to us and have a chat about, well, what's coming up later on in the year about AI in construction, we know that twice a year there might be an AI in construction grant run, and we'll say, okay, well, this should be coming out in September. Why don't you look to go for that? Because it's themed, it's bang on the money with what you're trying to do. So always come and talk to us. I think the message there is because we do have that knowledge of what's coming up when, and 6 weeks is on the borderline to write a strong application, I always think.
Yeah, definitely. And if you don't have time to constantly be looking UKRI, Joe will pop a link in here. We've got a funding finder. You can go in, put in the sector that you're interested in, and we'll send you the grants as they're coming out. So it just takes some of that kind of, oh my God, I've got to be searching constantly. And once we've had a chat and we understand what your technology is, we'll always come back and let you know. If we find a grant and we think this is really, really good for you, then we'll come back and let you know. I can have the next slide, please, Joe. So although we were saying earlier, ultimately it's free cash into a business, but it doesn't mean to say that it's the only cash that you're going to need. So when you are applying into grant funds, there are some grants that will give you 100%, but most of them, as an SME, if you're going for feasibility studies or industrial research, they're going to fund you at 70%, which means that you still have to find an element of match funding. And so your average company, if you're going for 500k, I don't think many people realise in the early stages, you're not going to get a lump sum that's going to be there where you can think, okay, right, I can get going. What you need to be able to say in your application is, if we are successful, we have the means to get hold of, the first 4 months worth of, cash flow to keep us going. So if you were to start your project on the 1st of April, realistically, at the end of June, you're going to be putting in your invoices and it takes about 30 days. So you're not going to see that cash until July time. So you need to have it in the bank at the day you start your project. And, if you get to that point where you've been successful, you found out, yep, we can start our project, but then you realise, something's fallen through and you don't have that match funding, then you can have a chat with people like Rocking Horse Group who will be able to help you. They've got some advanced grant funding that, that I'm sure they'll have a chat with later. So there are ways to get it. So just remember, you don't have to have it in the bank when you apply, but you do need to be able to evidence where that's going to be coming from. And that's where it does tend to get a little bit difficult for early stage companies. So it's just making sure that you're at the right stage for grant funding. So it's awesome to get, that free cash, but you just have to keep in the back of the mind that you do still need to find 30% of it.
2 minutes, Esther.
Oh, next slide, Joe. So you can claim labour costs, and these are, PAYE costs. You can also have people that are agency staff. You can have contractors as long as they're under your direct control. You can also have subcontractors where, you know, you bat it over the fence and somebody else is going to do a piece of work for you. And for every £1 you get in labour cost, you can claim back 20p for your overhead. So that's going to cover kind of the running of the business in the background. You know, things like materials, if you're producing prototypes, you can include those. There's a little bit of travel. And if you need to purchase, you know, large pieces of machinery, equipment, you can't claim the entire cost back, but you can claim the depreciation throughout the grant. So I'm whittling through these really quickly. So
Yeah.
Next slide, please, Jen. So this is a really important one. So what do the kind of questions look like? And you have to remember when you're answering these questions that it's not just about, you know, I've got some great tech. You've really got to tell your story from the very beginning as, you know, why did you develop it? What were the problems that you were seeing that this technology that you've developed is going to solve? So the application is going to give you the opportunity to run through and tell them everything from, you know, those early stage of, you know, this is the summary, the scope of what we're doing, through to this is our idea, our innovation, you know, the justification of why you need public funding to go actually to move forward with it. What does your market look like? You know, make sure that you've gone out, you've done competitor, you know, detailed competitor analysis to say there isn't anything else out there. You know, what's the impact within your own company, but also what are the wider impacts that it's going to have? What are the benefits? How you're going to deliver your project? And the big one is value for money. People always say, how much should we apply for? We always say to them, well, how much do you need? Because you don't want to go in thinking, oh, free cash, I'll take as much as possible. It's actually look at your project, look at the costings involved and make sure that you're not going way over. And equally, don't kind of think, oh, well, if I apply for a bit less, I'm more likely to be successful. So completely under cost it, and then you find you can't deliver your project on time. So really important that when you're doing your finances, you put all your project costs in, not just for you, but anybody else that's in your consortium as well. Everyone has to have their own separate project costs. And then the fourth part of the application is all around your background information. And, you know, ultimately there'll be 10 questions that are all marked out of 10. And in order to be funded, these days you need to be scoring around about 85%. So every single one of those 10 questions is equally important as the one before. So don't skimp over thinking, I'll just look at the technology and the route to market and completely avoid the risk. So it's about making sure. Go on, Sam.
I think that 85% is even harder to get because there are typically 5 assessors and they all answer the 10 questions, and then it's kind of the average over all of that. It's got to be 85. So if one presenter hates what you're doing because you haven't sold in the story, he can completely scupper your application. So it is really a case of fine tuning that application, isn't it?
And
we
minute,
Esther.
Okay, so we always, if we can have the next slide, please, Joe. But we always find that, you know, one person didn't understand it, one hated it, and the other all three thought it was great. But so some top tips. So as we say, you know, 85% is the kind of benchmark success rate where you need to be. So answering every single question. And if you're not sure about answering the questions, make sure you read all the supporting documents that go with your grant, because it will give you bullet points. And if you can answer those bullet points of what they're trying to find out in each section, then you've got a better chance of success. You know, another big one is remembering that those assessors are going to be competent professionals, but they might not necessarily be an expert in your particular technology. So if you're using acronyms and technical jargon and somebody outside of your business isn't going to understand that, then it means it's going to be really difficult for those assessors when they're reviewing it. So try and keep that to a minimum and make sure that anybody that picks up that application understands what you're doing. You know, get your project plan in place. And we say this to people all the time. Don't wait for a grant to come out in order to start thinking, right, project plan, let's get our partners on board. You know, make sure that you're having those conversations with partners early on so you get their commitment, and you know that when a grant comes out in June, you know exactly who's interested in being involved in that, and you've got your project plan all sorted. Leave plenty of time for writing your application. So Innovate UK themselves will tell you that you need at least 200 hours to write a really decent application. At TBAT, we take, you know, an absolute minimum for us would be 4 weeks if we're doing a, you know, from scratch application. We really like to have 6 weeks if we can get it. Make sure that once you finish writing it, get it reviewed, and whether that's, you know, internally, you can go to Innovate Edge, you can come out to people like TBAT. We offer a professional review, but make sure that you get somebody to review it. And don't leave it until 5 to 11 on a Tuesday to upload it when you know the deadline's at 11 o'clock, because we've spoken to so many people over the years that said, oh, but the system went down, or, you know, my laptop broke. Once you get beyond 11 o'clock, you've got to wait for the next round, or it just won't get funded. And the biggest tip from us would be, make sure you fit the scope, because if you spend 200 hours like writing the absolute best, greatest application possible, but you miss something, and actually you are applying into a biomedical catalyst that says you can't do animal studies, and your first bit in there is animal studies. And I had this just, last time round, it wasn't even marked and it got thrown out. So make sure you fit the scope. And I think I've managed to get that in almost 10 minutes, Sam.
Almost 20 minutes there, Esther.
Amazing.
I mean, I've done that presentation so many times, Esther, or similar to that, and I know there's a good hour's worth of chat there. So
absolutely.
An absolute whistle-stop tour, fantastic. We're going to move on to Yaz to talk about R&D tax credits, and then if there's some Q&A, we'll cut down to just a few minutes at the end, and then we're just going to do 5-minute comfort break to get us back online. Amazing, Esther. Thank you very much.
Thanks, Sam.
Yaz, you're on. So Yasmin's been with us for, I think, about 18 months now, an absolutely star of the R&D tax team, and Yaz is going to have a little chat with us about R&D tax credits.
Thank you, Sam. I'm just going to start a timer on my phone because I will waffle. Okay. So good afternoon, everybody. I'm going to try and tell you as much as I can about R&D tax credits in 10 minutes. But if I do miss anything off, Sam, please interrupt or ask questions and we will try and answer them. So in this segment, we're going to look at the R&D tax scheme, the rationale behind the scheme and a bit about the benefits. We'll look at kind of what is R&D for tax purposes and what HMRC look for when assessing eligibility. And we'll look at kind of the eligible cost categories and some of the qualifying activities that relate to those costs, as well as some of the key R&D tax changes over the past 12 months and some of the changes that are going to come into play next month that might impact anyone considering making an R&D tax claim. Next slide, please, Joe. Okay, so what are R&D tax credits? In simple terms, it's a scheme that allows companies to deduct a percentage of their qualifying R&D spend from their yearly profits, which, depending on their position, will generate a reduction in their corporation tax bill or will produce a cash refund. The incentive, the intention of the scheme is designed to stimulate innovation spending in the UK and to mitigate the financial risk associated with innovating. So essentially, it enables companies to invest more in their R&D spend, knowing that they're going to be able to get some of that money back. Some key things to remember with R&D tax credits. So it's a form of non-competitive government funding. And what we mean by that is there is no kind of competitive application process or a single pot of money that needs to be divvied out. It's as long as you're carrying out eligible R&D activity, each year, this is something that can be done in line with your company accounts, with your accountant at your year end. And you are able to claim for projects that you have undertaken in the past. So you're allowed to go back 2 financial periods when making a amendment to your company tax return. So we can look at projects that have already been undertaken. For accounting period starting after April 2023, there is a requirement for R&D claimants, for first-time claimants, to let HMRC know that they're intending to claim. So if that's something that you guys are looking to consider, please get in touch with us because we can obviously help you with that.
That's a new one, isn't it? Because always before you could just pop one in, off you go at any point. Yeah. And I think that's really just for them to put a flag on their system that there could be an R&D tax claim coming in, and probably makes them look at it just as at least a cursory glance to make sure that what you've put in makes sense.
Yeah.
And the rest of it. I don't think you have to justify what exactly you're going to do and the nitty-gritty detail. I think it's just an indication that you are looking to claim. I don't know. I've not seen the detail of what you need to put in yet.
Next slide, please, Joe. Okay, so there are 2 schemes. You've got the RDEX scheme, you've got the SME scheme. So for most part, the RDEX scheme is targeted for designed for larger companies, so 500 plus employees or turnover more than 100 million. And then the SME scheme is the small to medium enterprise scheme. But it's not just the status or the size of the company that determines which scheme should be used as part of the claim. So there are certain circumstances where an SME would need to claim under the RDEC scheme, and that can usually come in the form of a company, an SME company, undertaking R&D for a large company, or carrying out a project that is grant funded or containing some form of subsidised expenditure. And that those caveats have generated quite a bit of confusion, and sometimes error when companies are filing their own R&D tax claims. But the result of it is that the SME scheme's taken a bit of a battering because HMRC have decided to reduce the rate of the pound per the benefit per pound spent on R&D on the SME scheme. So next slide, please, Joe.
And I think what they've tried to do there, Yaz, is when you can cash losses in,
yeah,
they would rather you didn't cash losses in for money because it's out of their back pocket. They would rather you carry losses forward into the future where you're profitable. Now, the benefit of that is that could be at the higher rate, because if you make a lot of profit, you pay 25% tax, whereas the cashing in rate is a lot less, isn't it? So, yeah, they're trying to discourage people cashing it in my view. Just got a question on the advanced assurance. I think, so the question is it only for those who are new claimants, or is it if you've done them in the past but not for a few years, do you now need to let them know? I thought you had to let them know if you've had a break from them as well.
So the advance notification, I think it's for new claimants, but I would need to just double check because most all of our clients are ongoing. So,
and the legislation, it's quite hard to actually dig out some of this minor detail, isn't it?
But we can find that out.
Yeah. So Nikki, we'll get back to you, if we may, on to just clarify the situation. Cool.
Okay, so they've combined the SME scheme and the RDEC scheme now to kind of reduce that confusion and standardise the rates. So now we've got the new merged scheme, also known as the combined scheme, the single scheme, the simple scheme. Essentially what that means now is that all R&D claims will go through this scheme, so that any project that does contain subsidised expenditure, beforehand you'd have to kind of determine who held the IP, who held the commercial risk, and again it was this looking at the contracts and the terminology. Now it's just a case of it will all go through the merged scheme. The benefit ranges from £15 to £16.20 per £100 spent on R&D, but then what they have done is created the SME intensive scheme, and essentially this is a scheme exclusive for loss-making SMEs that are spending more than 40% of their overall company expenditure on R&D. What that means is that they're able to claim a higher rate for their cash credit, so 14.5% as opposed to 10. The threshold, the 40%, is set to reduce to 30% for accounting period starting on or after the 1st of April 2024, so next month. So if you are an SME, loss-making SME spending more than 30% of your R&D, of your expenditure on R&D, this scheme will apply. Next slide, please, Joe. I think you're on mute, Sam.
It's because I had a cough. Yeah, I thought nobody needs to hear me coughing. Anyway, so I've got a question here, a very quick one. Miraj has asked, I have an AI master's student who can help me with R&D, and I think the question though is, can I claim their costs in the R&D claim?
Yeah.
But I don't know if they're paying them or whether it's the university doing it.
Okay.
Probably a bit more detail.
Well, we've got the next slide after this is talking about eligible costs, so I can go into that. So firstly, we'll just look at then, so what is R&D for tax purposes? And this is really important because without kind of having some eligible R&D, none of this really applies. So the tax definition is a project that seeks to extend overall knowledge or capability in a field of science or technology. How I like to explain it is really simple. There needs to be 3 points, and the claim must have all 3 of these elements. So you've got your advance, you've got your uncertainty, you've got your activity. So your advance is that we need to demonstrate that the project sought to address a gap in knowledge or capability within the industry baseline, or sought to improve knowledge or capability within the industry baseline. And how that can take form is the creation or improvement of a process, a product, a device, a system, and normally the R&D will have a tangible or intangible output, i.e. A more efficient, faster manufacturing process, a cheaper, more durable material, a more automated software solution. But advance, we need to show HMRC that the project has sought to advance against what the industry baseline was at the start of the project. The second point, uncertainty.
So on that advance, it might be worth companies doing some Google searches and perhaps doing some screenshots of state of the art, because you could be making a claim 2 years down the line, and if you Googled the same thing then, you'd get up to date. So actually, if you're thinking of doing it, maybe just doing a little bit of research and just popping it in a folder about what state of the art was when you started the project.
So I actually, just off the back of that, Sam, I worked with a client when they had an inquiry with HMRC, and HMRC, to demonstrate, I mean, it comes on to the next point, but they Googled an article and cited the article that was actually dated after the tax claim period. So what we had to do was go onto a website scraper archive tool to show that the article was published after the claim. So leads me on to my next point. So the project must contain an element of technological or scientific uncertainty. There's my timer, so I will really hurry up. Technological uncertainty. HMRC apply a two kind of pronged approach. The first one is, was the knowledge readily available at the time of the project? What they mean by that was the solution available or accessible in the public domain? And then the second part is the competent professional test. Could a competent professional working in a similar field readily resolve the uncertainty? So it's about kind of establishing that novelty and trying to take it away from the routine, industry challenges. And then the last part is activity. So this ties in with the cost element of the tax claim, and it normally is split into two. You've got your direct qualifying costs, i.e. the work, the core work to overcome the uncertainty, and your indirect costs, i.e. your financial, your administrative, your management activities. Next slide, please, Joe. So to answer the question that was asked, staff costs, as long as they are on the payroll, you are able to claim the gross salary cost, your employer national insurance contributions and pension contributions. If they are through you might have to just answer this, Sam, but if they're through a university, it's a KTP, isn't it?
It's a bit vague as to quite where it's from. So if it's a KTP,
which is a knowledge transfer partnership, but essentially it's a cost that's eligible. It's for companies that work with academic institutions or research bodies as part of their innovation project. Yep. Alongside eligible costs, you've got material costs. So that's items that are consumed or transformed as part of the R&D that have no commercial value or internal use. They're claimable under the R&D tax credits. You've got software costs, which have now been expanded to include cloud computing and data licenses. You've got your EPWs, your subcontractor costs, and it's not on there, but also the costs for clinical trials is also an eligible cost for R&D tax credits. Yeah. Last slide, Joe. Thank you. Okay, so key changes over the past 12 months. You've got the introduction of the additional information form, which came into play last August. What that means is that all claims must be submitted electronically prior to the accounts being filed. So there needs to be some dialogue there between whoever's doing the R&D and your accountant. It also means that the costs need to be broken down per project, and also all of the information such as the advance, the baseline, the state of the art, the work that was overcome, why competent professionals can't readily resolve it, that all needs to be included now in a written format so that HMRC can look at it and consider. Beforehand, you'd just fill a box in on your CT 600, pop the figure in, and the claim could be processed. Second biggest change, restriction on overseas workers. So for accounting periods starting on or after 1st of April 2024, costs for overseas subcon and EPW costs will no longer qualify for R&D tax claims unless there is a specific technical reason as to why it cannot be done in the UK. The example that HMRC gives is very kind of black and white, but it's good to explain it, which is company using or testing volcanic sensors, on an active volcano in another country. The technical reason is they cannot do this in the UK. So it's about kind of geographical reasons, environmental reasons are most likely going to be the factors involved with that.
And the argument cannot be, I've used these for the last 20 years, therefore I'm going to keep using them. That's not an adequate argument, is it?
A technical justification, nothing to do with commercial or financial. They're cheaper, whatnot. And then last part, apart from combining the SME and the RDEC scheme to reduce the risk of error/fraud, HMRC have ramped up the amount of inquiries, and there are genuine R&D that are being kind of pulled apart by HMRC. But what we just need to get across is that we're answering directly in the reports, in the technical narratives. We're establishing the competency of the professionals involved in the R&D. We're looking at the evidence in the baseline, like you said, Sam. Really showing HMRC that this was the state of the art prior, and this is what we were seeking to achieve. And it's really important to remember, last part, R&D does not have to be successful for you to claim R&D tax credits. It's about what you are seeking to achieve, and how that would advance against the industry baseline. So that's it for now. Thanks, guys.
Amazing. Yeah, that was absolutely brilliant. You can breathe now. And should I say that was the first presentation of this you've done? And I thought you did fantastically well.
Thank you.
Well done you.
Pass out now. Let me turn my camera off.
Okay, folks. I'm kind of thinking the next session is only 30 minutes long, 35 minutes, and I don't know how we could actually do this. Do we just get through those two? Because my piece is only kind of 5 minutes, and then we've got a fantastic talk by Stephanie from Ostique. I think I'm going to just go for a 15-minute break at the halfway and not a 10-minute break now and one later on. So in that case, Joe, I'm going to go back and do my own sharing now, if that's all right. Here we go. Is that shared share? Okay, that should have come through. So it's back to me. So I'm going to, here we go, questions. That's me. I was a very much younger man then, and I had a lovely blue shirt on. So I'm founding director of TBAT. I've been in this game for 22 years. I live and breathe innovation in companies. I think it's the best job in the world what we do here at TBAT. But I'm bound to say that. So I'm just going to briefly touch on equity funding. First bit, where might you get this from? So there's you can use any money that you've got. You might borrow a loan from the bank. Be careful how you phrase what you're going to use the money for. The 3 Fs, friends, family and fools, they call that. I think you've got to be quite careful there. And going back to what Gemma was saying, if you're setting up a company and you're doing it with your best mate from school, do you really want to do that as a 50-50? Or do you think, if this guy or lady is under pressure, how are they going to behave? And what some founders do instead is do it on their own. And then after a year, they make shares available for the other person to buy in, because they've been through some hard times together. They've proven themselves. And now's the time to bring them into the fold with an equity stake. Also, friends, family and fools, you might end up with loads and loads of investors, a very poorly managed shareholder agreement, and then it can all go very wrong when you start getting real equity. And some people don't mind that. Other people say, I don't want to give any more shares away. So be quite careful. Maybe a loan is a better way of doing that instead of actually shares in your business. Business angels, of course, for them, they are private individuals who are using their own hard-fought money to invest in you, but try and choose one that has got a knowledge of your industry or has got a real passion for your industry, so they can bring something other than money to you and really help you start motoring and building your business. Venture capital funds, often a bit more of an ordeal to get money out of those in some respects, and quite often more checks and balances, but that can be some very serious money. And I know that Lewis from the British Business Bank is going to talk about some of the work that they've been doing to kind of try and level the playing field across the UK. So Lewis has got a great chat later on this afternoon. And one interesting one is industry. So instead of going and borrowing money or getting equity into your business, why not do a joint venture with a company? It might be you've got some electronics product, there's an electronics company down the road who's selling to automotive, want to diversify. Let's launch a product together. And therefore, they're not investing their own hard cash, they're introducing time and effort, and it kind of reduces the risk for everybody. Okay, I'm going to talk about there's two key schemes I want to talk about: the Seed Investment Scheme, SEIS, and EIS, the Enterprise Investment Scheme. They also got the marketing experts sorted out there with government on the way they've branded those. I'm not going to go into too much detail because the slides will be available. Under 3 years old, looking to raise below 250k for this, under 25 staff. They're the key criteria. So that means it for you. What it means, there's something called advanced assurance. So if you line up your investors and you're saying we're going to go with SEIS, it means for them really important things. So I'll come on to my next slide. But once you've got them lined up notionally, you can get advanced assurance from HMRC. And the rules changed only recently. They now do not accept speculative applications. And so a speculative application will be, I've got one of my investors, I don't know who the others are. If I get advanced assurance, it'll be easier to get the others. No, you now need to present all of them in the hope that they do come along at the end to get your advanced assurance and you go back to them. Big change there, so be careful how that works. So what does that mean to the investor? So they can invest up to 200k a year, quite a lot of money. In their next tax return that they give to HMRC, they can offset 50% of it against their own tax bill. So if they're wealthy individuals, they will be paying personal tax. If they've invested under SEIS, 50% is offset. Also, it means that the 50% of hard cash that they've essentially invested, if that goes wrong, 45% of that can now come off their following tax bill. So their actual risk is down at 30 odd % overall. And it's really amazing for investors to really de-risk their investment. You can spin that, you can flip it so that actually I've got SEIS advanced assurance now. Therefore, the deal is going to be like this because I know you're going to get your risk capital is only 25% of what you're giving to me. It can apply to directors. There's some rules around shares for family and how close those people are to you. Most importantly, if they keep those shares for 3 years, they don't pay any capital gains tax on what the shares are now worth. And that's an amazing benefit for investors. So SES, great scheme if you're at early start and you want to get moving. I won't go on to that. EIS, it's the big brother. You've got to spend the money within 2 years what they invest. You can have 12 million over the lifetime and 5 million in any 12 months. However, if you flip your company, you were designing machines to cut metal with, and suddenly you now want to be a software company, you've flipped what the company does, you can start the EIS process again and raise more equity because you've pivoted what you're doing with the business. That's a really important one. Again, for the investor, 30% of what they invest, they can now offset against their tax bill, not 50%, but 30%. But the risk capital is the full 70 that they've had to stump up. There's none of this extra Brucey bonus under SEIS. Of course, they get the capital gains holiday if they sell their shares for a profit after 3 years. Both of these schemes are absolutely fantastic. And if you are in the market to secure money via investment, you really need to be looking at these. The actual paperwork for advanced assurance and if you've got the investors and you now want to get them in place, those schemes are virtually the same. It's your business plan, a bunch of forms with HMRC. It's a proper cash flow forecast, balance sheet, profit and loss, cash flow, and kind of rudimentary tax calc. There is your pitch deck, list of the investors, who your current investors are and what the shares look like currently, what they will look like in the future. There's the actual paperwork is very similar for both advanced or after the deal's been done. Quite a lot there. Some companies will help you go through the whole process and will just help you do the piece into HMRC, assuming you've got everything stacked up, ready to go. Really, really important schemes. What else do you need to know? because the advanced assurance has changed, it's not quite for me the gift it was for you as a company looking to get money, because you actually now need all your investors on board before you get the advanced assurance. It still gives them an awful lot of confidence. Getting advanced assurance is not HMRC saying it's a great investment opportunity. All it's saying is that with the information presented, it looks like it meets the requirements of the scheme to get advanced assurance and that relief for your investors. That's a load of stuff. These will be in the slides. Seems quite a long list, but to be fair, if you're going out to investors, you should have most of this ready to go in one place. In a nutshell, prepare well in advance. Make sure you've got everything buttoned up. Do a great business plan. It is the selling document of your business. Make sure it sparkles and tells a great story. Secure your investors now and make sure that they don't need to have signed on the dotted line that they'll invest, but that their hat is in the ring. And so you can go for that advanced assurance. Typically, HMRC turn these around in 6 weeks. Sorry. I think a really important one is the financial model. I'm an engineer by trade, but actually financing businesses is a real key to me on the success of any business, and make sure it balances. And do consider, do I pay somebody to help me out with this? Because lots of nuances around how a really robust cash flow works. And do spend a bit of time reading around the subject, because it's your company you're dealing with here, and it's easy to get it wrong. So do spend your time understanding what it's all about. Okay, that is all I wanted to talk about from my perspective. So I'm going to stop sharing. I didn't see any questions in the chat, so that's tickety boo. Stephanie, I'm going to stop sharing, and so Joe can start bringing on the other ones. I met your colleague Olivia at an event in London, a medtech show, and I was blown away by the business idea that you had. And so we got chatting, and I'd have made a few introductions, and hopefully they might come up in conversation. But I thought the story that you and your team have been through and the company would be a great little showpiece for this part of the presentation. So I'm going to hand over to Stephanie Monty, the CEO of Ostique. Off you go.
Thank you very much. Thank you for inviting me to talk. Joe, fantastic. Thank you. I think we can immediately go to the next slide. Thank you. So hello, everyone. Good afternoon. So yes, as Sam said, I'm Stephanie. I'm the founder and CEO of Ostique. We're a medtech startup, and our reason for being is to transform and improve the lives of those living with chronic bowel disease. We do this through innovative product design, but also the power of shared experience through our community, our podcast, Chatting Shit with Ostique, and a number of online and offline events. So thank you, Joe, sharing our website in the chat. So yeah, I'm here today to talk to you about the exhilarating ride that is raising finance for your startup, and hopefully shed a bit of light on our own experience and provide hopefully some useful advice. I would note that I am predominantly talking about equity investment and grant funding, because that is what we have experience with. So next slide, please. So our journey started way back in 2017. I was a solo founder. I was fresh out of university. My background and training is in product design or product engineering. But I had a really great idea inspired by quite personal reasons. My two younger brothers have Crohn's disease, which is a common prelude to needing stoma surgery. The surgery itself is where a hole is made in your abdomen. It diverts your bowels, your fecal waste into an ostomy bag, which is worn constantly. And with my background in product design, I was looking at how this might impact my brothers and realized that despite a huge number of products on the market, some of which are incredibly innovative, actually there was still a real need. There was still some functional issues with the products themselves, and that in turn was having a kind of a mental health or emotional impact on patients. So I had a great idea, had no idea what to do with it. And so I quite literally began applying for every single startup award, every competition I could. You can see a few names up here. So jot them down if it's useful. I would also very much recommend signing up to a newsletter by the wonderful Drew Curry. It's called, what's it called? Show Me the Money. And I think he does it once a month, although don't quote me on that. And it's basically a roundup of all recent funding opportunities and so on, or speak to obviously the wonderful team here at TBAT. So yes, applied for everything, and I was bootstrapping the company. I was working 2 other jobs, but winning a few of these awards gave me, you know, a couple of £100 here, maybe £1,000 there. And a key element of going to these events was the networking. And it was through networking, which, as you'll hear later on, is such a pivotal part, such a crucial part of fundraising. It was through that I met the wonderful team at the Birmingham MedTech Cooperative, which, if anyone here is in MedTech, I would absolutely recommend reaching out to. And with their help, we actually applied for and won an Innovate UK startup grant. Next slide, please. So obviously, Esther, you've gone into great detail about the Innovate UK grants. I completely agree with everything you said. I think there's so many benefits to something like Innovate UK. It is free money, it's non-repayable, it's a real stamp of approval, and it leads to a number of amazing opportunities, increased competitiveness, job creation. It kickstarts your company. It certainly did that for us. However, next slide, please. The less good stuff is that there is lots of paperwork. I know, Esther, I think you mentioned you like 4 to 6 weeks to write the grant. On average, it's taken us 3 months. But that's because we're doing our day job in the meantime. And it doesn't end there. Once you get the grant, there is lots of reporting. There's quarterly reports. There's lots of documentation. You have to pay a percentage of the project costs, and you get paid quarterly in arrears, which means you have to spend 3 months worth of money to then get it repaid. So it's just something to bear in mind from a cash flow perspective.
And you know, well, at this stage, were you employees of your own business, or were you doing it as kind of in-kind help until you moved it to a certain size?
So I was a sole employee. So yes. But actually, off the back of this, I welcomed my wonderful COO, Tony Schneider. She was our first hire, and my partner ever since. So yeah, absolutely, it allowed us to grow. Yeah. So there I was with an Innovate UK grant and a team of partners, but with no way to pay the project costs. So then became the task of finding investment. And again, Esther, I believe you said, you know, it is, you have to measure up at sort of what stage, if you're ready for a grant, because you do need to, you know, put up some costs yourselves. So I approached all my friends and family, much to their dismay, and, you know, went on the sort of the pitching round. And we were lucky enough to have a wonderful small, medium-sized family office join us. And that initial investment plus the Innovate UK grant really kickstarted our company. Next
quick question. Did you go for an Innovate UK Smart, or did you go for a more medical biased one?
It was a Smart grant. They were called something else back then. This is in 2018, but it's the equivalent of the Smart grant. It
was the Open Call or something, wasn't it?
Open, exactly.
Yes.
Yeah.
It sounds like a golf competition, doesn't it? That, but there we go.
Absolutely. So yes, I would say as well, we have since applied for a couple of others and been rejected. So it is, you know, having been on both sides, it's incredibly difficult, but very beneficial, of course.
I think certainly when we've worked with clients, cutting across you, I'm sorry about that. It's the fact that they've now got that plan, which is their next 18 months technology roadmap, and they've got the latest market intelligence all in one place. It's a great piece of work to be. It sounds like it's a waste. It's not a waste. I think it's a bit of a milestone for companies that they can then build into their business plan for investors or whatever, because you've captured it all in one place.
Absolutely.
In your 400 words a question. Yeah.
Exactly. No, but it's absolutely true. I mean, we have nipped in and out of applications, both successful and unsuccessful, for due diligence, for our latest fundraise, last year. So yeah, absolutely not a waste of time by any means. So yeah, sorry, I do have a couple of quotes throughout. I don't know how people feel about quotes, but I liked this one. I do think you have to learn, particularly with investment, by doing it. But I wanted to give sort of the top 5 things that we've learned over the years. We have now done 5 investment rounds. Yes. Mostly with angel investors and family friends and family offices, and in our latest round brought on 2 VCs. So a range of experience there. And so yes, here are my top 5 things that we've learned, and hopefully some of you will find these useful. So I thought it was really important to discuss actually investment stages when it comes to equity investment. And that's because depending on what stage you're at will depend on perhaps who you're pitching to, and therefore how you might want to tailor your documentation. So pre-seed, earliest rounds, you're going to be a sole founder probably, or have a very small team, perhaps there are a couple of you. You're at concept stage, perhaps you have a proof of concept prototype, and really you're doing, the money from friends, family, the 3 Fs. I like that, I hadn't heard that before. Angel investors, or perhaps, a business incubator who might, give you finance or support in return for equity. Next slide, thank you. Seed raise or seed stage. I have put in a kind of rough amount here, although, that's not a rule of thumb. It could be a little less, a little more. But your company is moving now into the later stages of product service development. Perhaps you've already launched and you're using that money to sort of test and iterate your strategy, understand the market and your position within the market. And again, the money is coming from family, friends, angel investors, but perhaps at this stage you're bringing on, an early stage venture capital firm as well. Next slide, please. So Series A, you're getting into big money here. And really the company needs to have traction, users, revenue, sales, whatever KPIs, key performance indicators you've set. And really the money should be putting towards growth, expansion, increased revenues. That's really what your investors are looking for. The money generally is going to be from angels, but most likely venture capital firms. Again, there are other ways of funding. I know I've mentioned that. This is just from an equity perspective. Yeah, thank you, Joe. And then Series B, C, D, and so on and so forth. Big money again, and really, you're looking to massively expand the company, probably internationally, gearing up to sell, or go for an IPO and so on. So yes, and as I'll get further on in the talk, as I said, you have to tailor your documentation, tailoring your pitch depending on which stage you're at. So absolutely. Next slide, please. Okay, I'm going to talk about the 2 investors we have experience with, angels and VCs. Angels, wealthy individuals looking to invest, of course, for financial gain, but also other reasons. Many are hoping to give back to the community in some way. Perhaps actually they have some experience or background, personal connection with the problem that you're solving. And so obviously they want to give back in that regard. Very much angel investors, of course, they are looking for the market opportunity or the potential for your innovation, but they are investing in the team. They want to understand your background, your experience, why you are the ones to deliver this dream. And so in that vein, you should be thinking about pitching and developing your pitching materials, your pitch deck, and so on and so forth, to emphasize that, because it's very likely at the beginning you're not going to have the necessary metrics, the necessary traction, to prove otherwise. So yes. And
did you practice pitching? So
you have no idea. Yes, we did. Yes, we did.
Yeah.
Yeah, absolutely. For years and years and years, and I would say we still probably have a lot to learn. So
yeah. And
it's evolving.
Yeah, always reverse the story is like try and do your first pitch to the people you think will be the least interested, because it doesn't matter if you completely can it. You can, but you've learned and you think, oh my gosh, that was such a horrible experience. What can I learn? And now you've actually got a far better proposition to take forward. Yeah.
Absolutely. Yeah, I was going to mention that later. So
Oh, okay. I beg your pardon.
Yeah,
I should have read your
100%
slides, of course, but I didn't.
Joe, next slide, please. Thank you. So VCs or venture capitalists, and really another kettle of fish. They are, of course, employees of a VC firm, so they are investing other people's money. And as such, their main focus is on financial returns. That doesn't mean that's their sole focus. Of course, many are looking to do good and so on, but yeah, they are looking here for normally high risk startups, but with real potential for exponential growth. And as such comes with more strings attached. So, you know, they're often giving you more money and therefore they're going to take more ownership or equity from your company. And they'll also expect you to be hitting your KPIs. There'll be much more diligent reporting, much more focused and comprehensive due diligence to get a VC on board. And I think I'm not going to talk too much on it. I believe Roger might be touching on this in a little bit in terms of, you know, things they might ask you to sign up for as well, such as warranties and so on. But yeah, lots of things to be aware of, but some definite benefits, not only in terms of the amount of money they're able to offer, but also they'll have a lot of business and institutional knowledge, lots of connections and so on that you'll be able to benefit from. Next slide.
Quick question, if I may. Got a question in the chat here. Is there a maximum amount of money a pre-seed company should be asking for? So pre-seed is really, really quite early on, isn't it?
Yeah. I would say
that's a tricky one.
Yeah, it is a tricky one. And I think it really does depend on the sector in which you're working and yeah, and I suppose what you have done thus far. I think it comes down to, I think if Roger, if you're gonna have a better answer, I'll give you 1 minute. But for us, it's always a combination of what we're currently valuing our company at, what money we think we need for the next, well, it used to be 12 to 18 months, although with the recent financial hoo-ha that's been going on, more like 18 months to 2 years. And also how much percentage of the company you want to give away. So I would say roughly you want to give no more than 20% per round. So hopefully that's useful to work something out. But yeah,
amazing.
Roger.
Yeah, good answer, Roger. You're on mute, Roger.
Apologies, I was being good and muting myself. I think that's a brilliant answer from Stephanie. I think the only other point to make on that would be it really depends what you want to do with the money, because in asking for the money you have to demonstrate why you need it and how you're going to deploy it. So, you know, if you need more because your business plan requires more, then you should be asking for more.
So thank you for that, Roger. Yeah, it's having that like with all the funding stuff we've been talking about, it's having that coherent plan that is well thought out with the cash flow model, all the way from the words that Jenna was saying. Do you can see here you're about to timing is everything. Do you always try and have kind of 12 months plus cash runway in the business? So you close one round, it might be 2 years of cash. A year in, you're not in a distressed position, are you? So now, so yeah, I think this is exactly what you're about to talk about, isn't it?
It is, yeah. You always want to be, I mean, if you can help it, and I say this having been not always in this position, or we have not always been in this position, but if possible, you want to raise, you know, when you're in a position of strength, so i.e. money in the bank. It's not always possible. But yes, that's why planning and timing is absolutely crucial. This is not rule of thumb. This is just from our experience. We take at least 3 months to plan. And by that, I mean 3 months to prepare all our investment documentation. So, you know, people have touched on this before, having a data room, which is essentially, it's a folder where you have all your pertinent documents, such as your investment deck, your pitch deck, your, you know, your cap table. And sorry, if I'm saying words that people don't understand, please just let me know. You know, your financial model, which is absolutely crucial, of course. You know, everything that you might need. So we take ages to work on that. Also, because I will talk about the deck in a moment, you need different variants of the deck, and an executive summary, and a short deck, and a long deck, and so on. So absolutely, in terms of documentation, you need to be ready, but then also in terms of really having a strategy for who you're going to speak to and who you're going to outreach to. This very much comes back to the networking point I made at the beginning. You never know who, you know, some random event you meet, you know, a person, and you never know when they are going to become useful. However, going to the events, meeting the people, doing the work as early as possible puts you in a great position of strength. It's really important that you're having a warm introduction, or utilizing, you know, benefiting from an existing relationship with an investor, rather than doing cold emails and cold calls. You know, you really want to prioritize and strategize how you're going to go about that investment. And then at least 4 to 6 months to raise, and also having a contingency plan for if you don't raise within that period, how are you going to elongate your cash flow? Yeah, and I think the only other thing to note is that also the time of the year is really important. From our experience, investors tend to go away in the summer, and they tend to go away at Christmas. So really, there's a very limited time as to when you can raise. You know, it's really kind of September to November, and then perhaps January to May. So just being mindful and really, you know, yeah, really planning, really strategizing.
Yeah.
Yes, next slide, please. So the deck, and I will go through this fairly quickly, but I thought it was important, I suppose, to share from our experience what has been successful, because there are there's so much advice out there as to how you should present your deck, and I have alluded earlier to the fact that, you know, for different stages, for different investors, you're going to want to, you know, perhaps alter this structure slightly. There is no one perfect way to do this. The only way you're going to learn what works is to do it and then test it and see what the feedback is. And actually, we always ask for feedback from investors. Even if we're not successful, we ask for feedback. So I would suggest doing the same. It's really useful. But yes, you will possibly want several versions of your deck. You might want a short version. We notoriously do very long decks, which annoys some people, but it has so far worked for us. You might also want, you know, an A4 executive summaries page, and so on and so forth. So make sure you have different versions, or you're able to adapt your deck according to the situation. I think the overall point is quality is key. You are telling a story, and therefore, even though this is a business proposal, this has financial metrics, you are still wanting there to be a really lovely narrative throughout your presentation, and that's really important.
Yeah. Did you create all of the content yourselves, or did you sort of do, this is the information I think we need it, and then another company pulled together the graphics and the look and the feel, or did you do it all internally?
So we did it internally. I have a background in design, so yeah, so sorry, I have all the design software, but my whole team, actually, we're all very creative, and it's very much a, you know, a collaborative affair.
Yeah.
I personally think I would not waste money on using someone else unless you absolutely have to, but perhaps if you have a friendly, creative brother or sister or family member who will help you out, I wouldn't waste money on getting someone else to do it. But yeah, it is important it looks nice, at least clean.
Yeah.
And
And the financials, did you build those yourself, or?
Finances is something different. We do build them ourselves, but we also do have an incredible support system. We have amazing accountants, advisors, and so on.
Yeah.
So that very much, it's a bit of a speciality, and as such, I think deserves expert advice.
Yeah.
But yes, thank you. So just the why, obviously you've heard about our origins, but really the why should be a powerful and inspirational way to hook your investors in. And it really is the first time they see you, and so you really want to grab their attention. They are probably only going to spend a few seconds or 1 or 2 minutes looking through your whole deck, so you want it to be really punchy. Next, please.
So we've got about 8 minutes.
Yes, I'm going to zip through these really quickly. So market opportunity, we like putting this up front in our deck because it lays out why the investor should invest, because they're going to make a huge amount of money, hopefully. For something quite niche like stomach care, which is arguably not that sexy, understanding the financial returns is something that has worked well for us. Next slide, please. I think, in fact, you could probably skip the next. I think problem and your approach and solution, fairly self-explanatory. I think the only thing to note in your approach is this is an opportunity for you also to compare yourselves against the competitors. So having, a really neat table of your USPs, your unique selling points versus the competition might be a really nice way to bring that in.
Yeah.
Your business model, how you're going to make money. Traction so far, I would say if you're early stage, you could combine this with achievements to date, and it could be as simple as, a quote from an expert. You don't necessarily need to have clinical data or, test data. You think creatively about how you can, show that other people think your idea is good.
Yeah, I thought what was really good about your story was you quite quickly got into various trials with smaller NHS outlets or trusts, whatever you want to call them. And then for me, surely the biggest thing that ever you achieved was when you got onto the tariff, the NHS tariff, because then doctors can prescribe it or people can choose to use it. That this is the traction piece, I suppose, isn't it?
Yes. Yeah, no, absolutely. You're absolutely right. And I think, of course, our experience is very much in medtech, in medical technology, where there are lots of hoops to jump through in terms of regulation and working with the NHS and so on. So even if you haven't achieved those things, I think if you can at least show that you have an understanding of them, and then perhaps in the future roadmap, you can at least highlight kind of where those milestones are going to come, like how long it will take you to achieve those things, I think would be really useful. And I'm sure that's the same across the board, not just, in medtech as well. Financial projections are, for us, we keep this very simple in our deck. We do a kind of, a lovely hockey stick graph, and then we refer basically to our financial model where all the juicy stuff is. The team, if I was very early stage, I would put this much higher up, probably where kind of approach solution is. And again, emphasizing your background, your experience, why you're the right people to do this. And of course, include any experts and advisors that you work with as well.
Because that's the point where they could be backing the jockey as opposed to the horse. Absolutely. And you need to give them the faith that if they invest in you, you will get that horse over the finish line, isn't it? Whereas once you've got the traction and you've got some kudos, as you say, it's a slightly different placing in the order there. Yeah, interesting.
Absolutely. Achievements to date. If you've, like us, we won loads of those really early awards and so on. Pop it all in. This is an opportunity to gloat. If you're university and you did amazing in your university, pop that in. Why not? And yeah, future roadmap, as I mentioned, laying out that sort of milestones that you have to hit. And then finally, the ask and use of funds is really, really important to not only ask specifically for the amount of money that you want, but also to very specifically detail what you're going to use that money for. So, I am going to use X amount of money to hire a sales team to, you know, achieve revenue of X, or to increase my revenue by X, or whatever it might be, but being very, very clear, because investors absolutely want to see this. Next slide, please. Okay, and this is the final bit. I really liked this quote, and I'm so sorry for anyone who hasn't raised money, but this is the sad truth. There isn't a lot of fun in fundraising. It can be incredibly difficult. One of my COO calls it soul destroying, which it has been on occasion. We have spoken to hundreds of investors over the years, and almost all of them have said no, apart from the ones that count. And I can assure you that at Ostique, we are now doing incredible things as a result of that. So it's really hard. You are expected to do your day job and raise money at the same time, and raising money is a full-time job in itself. However, can we go to the last slide, please? If you are successful, you can not only live your dream, but you can bring your dreams to life. And I would thoroughly recommend that if you believe in what you're doing, if you have the passion and the resolve to keep going, it is 100% worth it. We love what we do at Ostique, and yes, there are difficult times, but it's absolutely worth it. So yeah,
amazing.
That's me. Thank you.
Absolutely amazing, Stephanie. What a journey. And as you say, 2017, I think you said you started. Was it 2017?
2017 is when we were founded, but 2018 was where we got the grant, which kind of
amazing. 6 years in.
So,
Would you do it again?
Do you know, I think it's really wonderful to not know what's ahead of you.
That still happens when you're 22 years into building a business. I can assure you of that.
Exactly. No, truly, I mean what I say. Like, I'm very blessed to work with an incredible team. Our community is unbelievable, and I feel truly blessed to do what we do.
Yeah, amazing. And what was your highest high in the journey so far?
Oh my goodness, that's do you know what? I'd like to think
meeting
the
me.
Highs are still to come. Sorry, I know. I truly I work with an amazing team, and so that is fantastic. We have achieved quite a few fantastic things recently, including an investment round, bringing on VCs. We have had the most amazing experiences working with people across the world in our community, on our podcast. And yeah, it's those interactions, those are the highest highs for us. Yeah, fantastic.
Your passion so shines through with what you're doing, and I can see what I mean. A brilliant product, but your passion, and I met other members of the team, the passion you all share, I think is amazing, and fantastically well done. And let's get you on in 3 years' time and hear about the next few steps of the journey. That would be absolutely amazing.
Absolutely.
Thank you so much for giving up your time today. Amazing. Folks, we're going to stop for 10 minutes there. We'll be back at 3, which brings us back onto schedule, amazingly enough. We've got 3 superb talks coming up from Roger at Shakespeare's, James and Rob at Rocking Horse Group, and then finally Lewis. Lewis is terrific. The work that he does with the British Business Bank and the promotion of it and the funds available to companies through the British Business Bank, it's a really fascinating last 30 minutes Lewis will be doing. So let's break now, and we'll be back on at 3 o'clock. Thank you very much.